As I said, Kevin Crean joins me now to take a closer look, as always, at the latest economic data. And we've just got the latest NAHB housing market index. What are your takeaways from that, KG?
Yeah, well, looking at this index, it actually has been in, let's say, contractionary territory for the last couple of months here, and it continues to do so. We actually did see a bright improvement, or a little bit of an improvement since last month, but that did come in at 37 for that index level. Street was looking for 33. Last print was actually at around 32, but if you look at the last 5 to 6 months, we've been in this 30-ish area. Now, any number below 50 really obviously just means that the optimism around the housing market is dismal, to say the least, and that's really kind of being reflected in some pockets when you're looking at consumer surveys over the last couple of months here. But you did see a little bit of a bright spot when it came to the fact that maybe consumers are seeing the interest rates in the future actually coming down a little bit. That could actually loosen up the housing market, maybe get some new buyers to really step in. Inventories also hitting the market could also push prices a little bit lower here. So I would say a stabilizing print, but we have seen a lot of volatility when it comes to housing market data, especially existing home sales and new home sales. We're not getting that right now, but when we do, we'll see if the housing market is trying to turn around here a little bit after interest rates, for the most part, have moved to the downside, especially if you're looking at the 15-year ARM or adjustable rate mortgage or the 30-year fixed.
Okay, getting across some of the other data, not getting business inventories, but takeaways from the Philly Fed manufacturing data that we did get this morning. What are you seeing there?
So we did see the Philly Fed index actually turn negative for the month here. It fell 36 points actually, down to negative 12.8. That's the lowest that we've seen since April. Now, shipments actually did kind of fall off of a cliff. That's really where the majority of that index, or that move to the downside, is coming from. That actually moved down 20 points, down to 6. Now, it's still positive, but once again, a pretty dramatic drop. New orders did actually increase by 6 points, and the employment index slightly lower at 4.6 here. So let's just say, for the most part, you are seeing some variability when it comes to certain regions within the Federal Reserve region. So we had the Empire State Manufacturing Index. That was actually a lot better. The Philly Fed, let's say it's a little bit more mixed. You are still seeing some pricing pressures as well. Prices paid index actually did rise by 3 points here, up to 49.2. So mixed picture, to say the least. But we have had earnings as well from the manufacturing as well as the transport sector. We had JBHT, or JB Hunt, actually reporting yesterday evening. Very low bar, but they do seem a little bit more optimistic when it comes to the transport business, and that's going to directly lead to maybe some of this optimism in manufacturing over the next 6 to 12 months, if we are able to kind of hammer out some of these trade deals, especially with China.
Okay, and as we look across the markets this morning, we continue to see these records for gold approaching that 4,300 level. How are you watching the commodities space right now with these all-time highs, Kevin?
Yeah, I mean, gold's making new highs every single day. I mean, this is what, the fourth trading session in the row where it's making new all-time highs. I think this is obviously a FOMO trade that's taking place. You could talk about dollar debasement and all these other factors, but at the end of the day, the market is noticing a trend, especially when you're seeing heightened volatility in the equity complex as well as the fixed income complex here. Trend traders like to go to something that's actually moving to the upside here, up and to the right, and that's what gold is doing right now. You're seeing record inflows when it comes to the GLD ETF, which is a proxy for gold, as well as the SLV. So this trade's going to remain intact until we actually do see something break fundamentally or just technically in nature. Right now, it just doesn't seem like that's actually happening here. And at some point, all good things do come to an end. We probably will see a consolidation, at least when it comes to gold, but it doesn't seem like that's going to take place right now. In the energy complex, on the other side of that, though, you are seeing, obviously, prices moving to the downside, which is probably a little bit more concerns around economic growth fears here in the United States as well as around the globe. And you are seeing, once again, natural gas prices kind of leveling out, moving to the downside because of weather. So the commodity complex in general have their own little themes. Metals seem to continue to catch a little bit of a bid here. But overall, I think it's every sector has their own little news story and own catalyst in order to push prices right now.
Okay, so what's the catalyst then for oil? Got any thoughts on that this morning off the back of what we're hearing from Trump, saying that basically India is going to promise to wean itself off buying Russian oil? What does that do for the supply-demand dynamic out there?
Yeah, so the oil market is, let's say it politely, they are not taking that statement seriously, to say the least. If that were to be the case, where do we see that oil flow coming from? If it's not going to come from Russia, and if it's also not going to come from Iran, remember that was also a thing as well, then you would actually see maybe some greater export activity here from the United States, and that's just something that's not being priced in right now. If that was the case, we'd see oil prices moving to the upside, especially for WTI, or at least that spread between Brent and WTI actually collapsing here a little bit. Just doesn't seem like that's the case. But a key area of support, once again, 57.5 or $58. Maybe some buyers really try to step in here, but we just haven't seen any clear bids. To keep on the radar for tomorrow, though, one thing to be mindful, it does appear that we will see a meeting potentially with President Trump and Ukraine's President Vladimir Zelensky, and there may be an LNG deal that also is announced at that point in time. If there is a substantial and long-term LNG deal, you could actually see the energy complex actually catching a bid. As LNG demand goes up, oil prices also tend to move to the upside because LNG is more tied into oil prices rather than natural gas prices. So that's something for the energy traders out there.
Okay, good stuff. Keeping an eye on the energy complex, particularly ahead of those key meetings tomorrow. Thank you so much, Kevin Green, as always, for your time and your insights today.